If you're not living under a rock, the Dow and S&P 500 just hit bear market territory, down more than 20% from the highs. We just saw the worst day for US stocks since the Black Monday crash of 1987. The remarkable thing about this sell-off is the speed at which it happened. It took just 16 trading days from the S&P 500 to decline 27% from an all-time high. This is the fastest transition to bear market territory in the history of the index. The old record was set in 1929 when it took 42 days to fall into a bear market. To end the week, U.S. stocks had their best day since 2008, following Thursday's historic sell-off. The Dow Industrial Average and S&P 500 both rebounded over 9%. Records are clearly being shattered left and right. Swings up and down are expected in this volatile stock market. So many questions to ask, especially for beginners looking to invest in the stock market. Is this the time to sell everything? Should I buy right now? Is another 2008 crash on our hands? What's up, everybody? Doriso here for another episode. With the market sell-off going on right now in March 2020, I wanted to go over my portfolio investment strategy now that the S&P 500 and Dow are crashing in bear market territory. I'll go over 3 tips I want to highlight about what's going on with this stock market, since records are clearly being shattered and recession talks are being brought up with the crash that's going on now in 2020. These points are for all investors and especially for beginners with little money to invest. Tip 1. Don't panic. Business shutdowns cause a slowdown in the global economy. When it comes to investing, I like to use logic and facts when it comes to building a stock portfolio from scratch. As discussed in earlier episodes posted back in February 2020, called The Flush Out, titled Stock Market is Crashing Right Now, Sell Everything. The stock market was collapsing quickly, and we were all aware of the early signs of the downturn. The stock market flush out is now causing a toilet paper shortage all around the world. If you notice there's no toilet paper in your area, click the like button. It helps the channel grow from 0 to infinity. Your support is definitely appreciated. Remember, there is always a catalyst that causes a decline in the stock market. The stock market just doesn't go up. It goes down, sometimes very rapidly like we're seeing right now, and the market also moves sideways, up, down, and sideways, 3 main directions over time. What's causing the crash right now? There's always a bunch of things, especially when things are constantly brought up in the headlines on TV and social media. Because of the most recent catalyst, we all know the name, a spark was lit for the market to begin the downturn and cause the flush out. Hopefully, you're stocked up on toilet paper during the flush out. Will this sell-off continue? I don't have that answer. It's not my goal to provide any financial advice. What I could tell you are facts and opinions of what I'm seeing. Fear is clearly increasing and the sentiment surveys are moving more bearish. Do the research yourself, Google it. These surveys are constantly being updated. Have you been to your local grocery store? Have you noticed toilet paper and even hand soap not in stock? With the current catalyst spreading, the majority of sporting events have made cancellation announcements. I'm a huge sports fan and love March Madness. Now with everything canceled and shut down, we all have to find things to do at home. The sports world is just one type of business industry affected by what's going on. These business shutdowns and slowdowns cause the global supply chains to be out of whack in the short term until everything settles down. More products will need to be ordered, provided, and shipped. Right now, there's a time lag with businesses that are slowed down. I do believe in American business, and we will get back on track. It just takes time. Tip number 2. Cash preservation is key for short-term needs. My money I personally invest is not for tomorrow. I've mentioned this point in earlier episodes. The cash deposited in my stock portfolio is money that I have no plans to spend or touch for a long time until my cash flow from capital gains and dividends hits my ideal number. Your number will definitely be different from my number. This is why I love personal finance. In times during a stock market crash or a recession, it's my opinion that you should have cash on the sidelines to cover any unexpected things that come up in life, whether it be 6 months worth of expenses, 12 months, 2 years, 5 years. It's really up to you and the amount of cash you have going out each month. The budgeting world calls this an emergency fund. It's important to remember recessions do occur. We just haven't seen a recession since the last financial crisis about 11 years ago. Time sure does fly by. Now, we're back in bear market territory. Use your brain. What do you think happens during a recession? I think many businesses eventually don't have enough revenues to cover their expenses. When this happens for multiple months in a row, the management team eventually has to make marketing budget cuts, as well as staff cuts and firings if they need to get more lean. A cash account for a company is just as important as a cash account for an individual like you and me. When there's no more cash to use, you have to borrow and build up debt. You probably have heard about the difference between good debt and bad debt. That's another topic for another episode. To recap, it's very important to have an emergency fund and invest money you don't need to touch for a very long time. You do not want to be in a position of selling at times of all-time lows. Tip number 3. On to point 3. Price discounts should be welcomed for stocks you want to build a large position in, especially for beginners looking to start investing. As I do in every episode, here's a quick stock portfolio recap. My YouTube stock portfolio on your screen is a little over $2,300. I did add a new stock in my investment portfolio, Apple stock. Based on my research, I personally think Apple is a reliable and profitable company with a strong balance sheet and has a sustainable competitive advantage over other technology companies. I also like the fact that Warren Buffett is a major investor already and has a long-term conservative value investment philosophy with his current position. This was mentioned in last episode titled 10 Tips on Investing from Warren Buffett. Those are just my quick thoughts to my bull thesis long-term. With the market swings going on, I had to add a blue chip to my small stock portfolio. I'll be a buyer of Apple stock if it continues to fall lower. This is why discounts are welcomed, since I'm just getting started with the stock portfolio with little money. I have plans to build large positions over time, and short-term moves down are great buying opportunities since I have no plans of selling at this time. Remember, a bear market is a good thing as stocks become cheaper, especially for individuals that have cash to invest. Sure, it can be scary to see your investments in free fall, but I like to keep my emotions in check when it comes to investing in the stock market. As I add more shares to my stocks, the total percentage loss will continue to go down as I buy at lower prices. A $500 movement down in the past week is nothing to be afraid of looking at the bigger picture when all my positions will be much higher than they are today. Keep in mind, these stock positions and cash position are very small amounts since I've only invested little money. I have plans to ramp up the size of my deposits higher as we continue on the mission from $0 to infinity. Remember, we are just getting started. I hope any beginners out there are learning a thing or two from my channel now that we're up to episode 21. Lots to learn from these swings down and up. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment and informational purposes only. Let's keep building from $0 to infinity. Hold on tight for the ride. I mentioned there will be some bumps along the way, and this market crash has certainly been a bump during this short blip in time. Better things are always ahead. Peace.